Good afternoon, ladies and gentlemen. I am Neha Fatima, the host for you for the discussion on embedded finance, next paradigm, strategies for security and privacy. The word embedded literally means to fix something firmly and deeply into something else. Thus, it is a process of translating from asset-based banking to digital banking. According to a study by Forbes, every Indian spent 4 to 7 hours on their phone day with cumulative 7.6 billion of hours spent. We often tend to identify ourselves as customers of product, but then we indulge on to become a consumer latent financially. Changes have never been easy. Embedded finance comes with lot of security and privacy challenges, which would be a part of a discussion ahead. With that on note, let's welcome our panel. Please give a big round of applause for our moderator, Mr. Prasanna Lohar, CEO, India Blockchain Forum. A big round of applause for Mr. Pawan Chawla, SVP and CISO, Tata AIA Life Insurance. Our next panelist, Ms. Nehal Kanikar, GM Mahindra Finance. And Mr. Steve D'Souza, CISO, ICICI Lombard. I would request our moderator for the discussion, Mr. Prasanna Lohar, to take the stage ahead.
Hello. Yeah, very good afternoon. I know it's a post-lunch session, so I think let's take it easy and let's see how we can create more energy during this session with all our energizing panelists. So we have Steve, Snehal and Pawan. So I think embedded finance is making a lot of noise since last, I think, 1 year. We have seen a lot of news around buy now, pay later in India and how regulator has come up with various guidelines which has disturbed or created some opportunity for banks also to be ahead of these kind of business models. I think if I go back, if I miss like a generation, if I go back in 90s, where we used to go do finance only with the bank branch, right? So we used to go and just deposit money or cash, see what is our bank balance, come back, and the lending process was also very heavy duty, and it used to take days together. That's how the traction was there. So while technology changes, right, from a 1G to 2G or 3G, people behavior also changes from a slow speed to more speed. Now with the WhatsApp speed, people want lending to happen immediately. They want lending should be ready. So we used to, I think you must have received today at least several SMSs, either from Bajaj or some banks. Your loan is ready. You have to say yes and your loan is ready. Then there is another process, right, recovery and all. But coming back, finance have changed. Finance have changed from traditional finance to digital finance where we live together. Finance will change more. It will become more intelligent finance with AI, blockchains or with the expected customer experience in 5G. Finance may change as a autonomous finance, which is already available. You are born and your finance is available. So likewise, many business models will come. We'll understand apart from finance, what is this embedded finance? Why this is so important considering existing challenges to give finance to the various layers, typically in SMEs or merchants. Apart from retail finance is very much easy these days. We'll start with Snehal. What is embedded finance? So we'll see her views and we'll open up the discussion more. Yeah.
Good afternoon, everyone. Just imagine if you were to go to a Chroma store or a Vijay Sales to buy a phone and you had a budget in mind, say 25K, 30K phone you wanted to buy. But you went into the store and then you realize there's this beautiful Apple iPhone, which is, way above your budget. And you would need some credit now to buy that phone because you don't have the funds right away, right? Imagine if you had to then go to the bank and tell the bank that I want to buy an Apple iPhone and please give me the additional funds that are required for that phone and then come back, to actually buy the phone. That is where embedded finance comes into play. Because you go into the store, you have your credit embedded in your store checkout journey itself, right? So when you're checking out from the store, if you have bought something for which you do not have funds, there can be a quick eligibility check and you will get a loan on the go. That is what embedded finance is all about. When I talk about this particular use case, it is essentially a embedded credit use case. Now, embedded payments is something that has matured so much that we do not spend a single day today without using one of those use cases. When we pay for Zomato, Swiggy, when we do a e-com transaction, to buy something from a Amazon or a Flipkart, or when you, book a cab, the payment that you do, you don't have to leave your app, to complete the payment. That is all what embedded finance is all about. It is about a seamless experience to the customer, a wow factor where customer need not leave the app where they are, actually taking a non-financial service to complete the financial transaction. And it is all about convenience, and that is where when the convenience comes, there are a lot of privacy and security issues also that come with respect to data sharing or any compromise or any frauds, and that is where I think we as a panel are going to deliberate today.
So I think pretty clear, right? What is embedded finance? If I ask some of you, how many of you took Ola or Uber ride? Half of them will say yes, which is another example of embedded finance. Moreover, there was a model by Ola Money. Already 300 rupees are there, which eventually they come out because another regulation came in, right? You cannot have, or those entities are not, cannot do that credit kind of thing. But I think embedded finance is now embedded in our life. You talk about Swiggy, Zomato's, the payment experience is available. You must have seen examples like if you travel down on the national highways, your toll is collected automatically. So I think India is blessed with a good infrastructure now as far as provisioning for embedded finance. Typically we have UPI, and last one and a half year we must have seen many examples how UPI is apart from payments giving back to the repayment for credit cards or loans, or those business models are coming. And these railroads are being utilized by insurance companies now, or lenders or wealth companies to provide better services. I think embedded finance will evolve more. There are many more business models. The way I was discussing with some of telecom service provider, they look at how their internal infrastructure, they will use it for providing the embedded finance. So I think business model will evolve from banks to other traditional players also. But when we open up more, right, and typically this very simple word, API, or open finance, or open data. And I think after 2014-15, where these words are coming from your European and other areas, right? So I think banks, insurance companies are providing these APIs or open data to get more services or acquire customers, understand customer more, and give back them more. So this one directional journey is becoming bi-directional to make more embedded into banking. So while we do this, we struggle with the important aspect, which is privacy, or data privacy, or security of the whole infrastructure, starting from customer, how they are going to input the MPIN or Aadhaar number, or some of their private data, right, which is called as a PII data, and how this data will move from app to the various ecosystem hubs, and directly to core banking or a core insurance product. And it's a job making exercise for CISOs or many more. I think those business models or those jobs were not existing 10 years before. I have visited, or I was part of some companies. There is one guy who sits and talks about information security, and once in a year he conducts security training and all as a part of but now the role is also embedded into the banks or insurance companies. So we have to see, I think Steve, please guide us, how it is very, very important. While we used to do this traditional banking or a traditional insurance, how data privacy security also is becoming more important part now. We, from top to bottom, from government to employee or a customer, everybody it's a responsibility. So let's hear your views around how it is very important in embedded finance. Yeah.
Good afternoon, everyone. So embedded finance today is nothing but a complex digital ecosystem, right, where the technology firms, the banks, non-banking institutions, retailers, and a lot of other organizations have come together to have this ecosystem enabled. What you just mentioned, to on the tip of your finger to have finance available. While all this is made possible, security and privacy is the backbone to enable this ecosystem to work, right? And without which there will be disaster. And some of the primary reasons probably why security and privacy have to be baked in at the start and as part of the design itself would be to begin with the customer itself, right? You have to get your customer trust and confidence, and as well as build reputation for the organization. You may have the best of product or the services, but one small incident can dampen the customer confidence completely, right? And we've seen this globally. We've seen multiple organizations who've gone through security breaches, and it's not only the share price, but also the market share eventually has a beating, right? Apart from that, the legal and regulatory environment today that we have. Globally, there's been a huge uptick in the regulatory requirements. In India itself, for the last 5 years, RBI, IRDI, SEBI, and a lot of other regulatory bodies have come up with stringent cybersecurity guidelines. And each of these guidelines have defined measures and controls that you need to be put in place, which are obviously need to be assessed, monitored, reported. And even from an ownership perspective, it does not stop at the individual who's doing this, but at the senior management and all the way to the board, right? And we have the the privacy bill just around the corner. Talk about penalties, and we are talking about a 250 or 500 crore penalty, and just imagine what that can do to a business, probably a mid-sized business, right? It can have serious impact on the business prospects itself. Thirdly, I would say is data breach prevention and data privacy protection. The financial industry and this digital ecosystem is the prime target for the sheer ease of the money that we get, right? And the ransomware demands, and not only payouts today globally, have reached a tune of close to $50 million, right? And the cost of a data breach has just been multifold over so many years now. So, this is serious business. And eventually the fourth point I'd like to say is long-term sustainability and scalability. You cannot have privacy and security as an afterthought and you try to bake it in as part of a product and service. It's not possible, right? Today we are living in a world where we are talking about rolling out products and services within a few days, if not hours. And if you do not have security and privacy baked into this ecosystem, which you are opening up as APIs and multiple other methods, it's probably not going to sustain for a long period of time.
Yeah, I think wonderful. And if I go back, how the evolution of this API or architecture have started, I think some banks or many banks were into monolithic architecture. Now they have evolved as an enterprise service bus. Now many service provider will come and say ESB is old. Let's move on to the microservices. Then many more other service provider will say microservice is old. Let's go on to the containerization on cloud. That is the demand. I think it's evolution. And to mitigate that demand, which is one of the important unit in the banks, insurance companies, is information security. And who are part of that decision making, which product to go ahead, which fintechs to align. So it's very, very important. As you rightly said, there are many guidelines are coming, GDPRs or expectations around how do we mitigate that. There are huge penalties. We have seen examples like Facebook's and many others, they are they are liable for those penalties because the data privacy is very, very important aspects, right? And when we talk about embedded finance, when banks are opening their whole data through form of API. Earlier, only one branch is open, right? So I think, say example, one bank is having 4,000 branches. The impact of having some data fraud or something could be only at one branch relevant to. But now you are opening branch to mobile to internet to open banking, where you are opening all data to that fintech company. So it's very, very important how securely you are opening the data, so that utilizing that data, customer can get onboarded. As you rightly said, there are regulations, there are many more expectations of insurances and so on. So it's very, very important to be part of that, right? So now we understand embedded finance is one of the business model for all, where we'll have a public infrastructure like account aggregator will come into picture tomorrow, right? So where banks out of enthusiasm, out of a competition, they will open up their APIs data onto that platform also, like FIUs or FIPs. So new business model will come where we will forget branch banking, or we may forget monolithic mobile banking, and every bank will be part of super app. Right, so now it is opening up. So it is a matter of survival. So matter of survival should not be with enthusiasm ki, okay, I want to be part of Ola, Uber, Swiggy, right? Many more others, right? So while we do this, we have to mitigate those. Some best practices has to be there, right? There are some best practices which keeps on coming in a silos matter. Like one guideline will come on eKYC, one guideline will come on some adaptive authentication, one guideline will come on put some FRM tool, some guidelines will come on how do you secure the data or report back data. Many more things will come, and it's a matter of that CISO collate all those guidelines, give in front of CTOs and all, please follow all those guidelines. Or let's bring on some standard where we have some open banking kind of a standards available outside of India, PSD2. In specifically use case like UPI, we have standard. This is how we should do, right? There are standards which account aggregator will come up. These things are keeps happening, right? So we want to hear from our friend what all those best practices, right? How we can really look at those best practices while this is a survival of fittest. So yeah.
Thanks, Prasanna. We heard that how the business is changing and how people are dealing with the data are changing their methodology as well. The way we are integrating our businesses with multiple applications and the way it is getting spread, the environment is becoming more complex. Before we secure the data, it is very important to understand that what are we trying to secure here. The definition itself of a PI and SPI, and there is a new terminology which has come up, is the OPI, is changing. What is falling where is need to be understood, and it is not CISO's job to only understand that, it is everybody's job to understand that. It applies in your personal life as well and need to be understood accordingly. Basis that only you can deploy controls. How you build it is first identify the data which is floating around, what is getting shared with using the APIs with banks, with other parties, and then only you can create your strategy to safeguard the data which you are planning to share or will be sharing currently as well with your respective parties. How it can be built is, it starts all with the identification and the correct categorization of the data. When you start identifying the data, start discovering the data, you will realize that what is relevant for that particular function, whether it is sufficient enough for them to do the job, define controls related to need to know basis, whether not to provision, not to over provision the access, but yes, limiting the access to what is needed by an individual function or an individual in the organization, and then making them understand, give them training on the data, on the utilization of that particular data, and accordingly build your strategy on top of it. There are various ways to do it. You can have awareness training created and have it circulated to all, and training will apply to all individuals in the organization. It is not restricted to only employees. Right from the board till the contractor, it should apply in your organization, because everybody at every stage is dealing with any kind of data. What used to be called as a marketing data earlier, now the definition is changing and everybody is realizing that it is PIA data which is getting shared and it need to be protected. How it will get bucketed in the system itself is been left by every regulator, whether it is SEBI, whether it is RBI, or whether it is IRDI, is on the understanding of the organization. Certain things which are defined in the regulation, certain things which are left on the understanding of the organization. Now, nowhere in any of the regulation they have been barred to utilize any kind of data, but the usage of that particular data which is required for business purposes has been restricted, and that is what every individual in the organization need to understand. The other thing which needs to be taken care is like the technology we are evaluating, and there are examples which we just talked about. We should also start on the data perspective and on considering the privacy, heavy usage of AI and ML. Focus on those technologies which identifies it automatically rather than leaving it on the human understanding or intelligence of categorization of particular data. Use that kind of a scenario to categorize the data and then put controls in and around it. The third piece is to be focused upon is the encryption of data, because like we talked about ransomware, we talked about other malicious things which are happening. Privacy is becoming a concern. You gave an example of Facebook, which has been penalized because of data privacy issue, and these challenges are going to be there, and they are going to trouble every organization. whether it is with the PDP like Steve talked about, which is round the corner, whether it is your regulation itself, especially it applies to the regulated organization, though other standards does not talk about it too much and there is no penalization, but when it comes to regulated driven organization, it becomes a norm. And that is where it plays a very important role, that people understand importance of the data which they are dealing with. Like for CISO, everything is important. I talk about from the security perspective that whatever is floating within the organization becomes a very critical aspect. But for a person who is just processing salary of an employee, take that example, he is dealing with employee data. For him, it's a day-to-day job. He may not realize what if the data goes out and what will happen. Similarly, if somebody is responsible for sending SMS to the customer, like you gave an example that we might have got a message every day, we get the message that your loan is approved, please call this number to avail.
Sometimes it comes from somebody else.
Yeah, it
Which
comes
could
from
be the-
somebody else. Yeah, you never know from where it is coming, but somebody who is sending the message should also get an understanding of why it is important and whether it is relevant for the business to be sent out or not. And if it is, even if it is it is relevant, what are the controls which have been built by the service provider? Because we all use SMS gateways, but people don't realize when we are sharing the data, for how long they are storing it, for what purpose are they using it, are they sharing it with somebody else? We don't know, and we never check. The business guys are not going to check it, and then it is left up to CISOs to figure it out and then give them a security clearance. It's a third-party security clearance which we need to give. Apart from that, there are certain customer risk detection methodology need to be built in within the system itself, because that will help you out in overcoming the upcoming risk or a potential risk which an organization may face in future as well. And that is how, and it's all start with collecting and analyzing the transactions which are going through. So the mechanism need to be built within the system itself, which basically gives an alert at any point of time if there are certain transactions which are changed. I'll give you an example. There was a company I was interacting and there is a fraudulent transaction which had happened. It had not happened at a stage when the data was uploaded in the system. It happened when the transaction was approved by the approver and before the payment was made, because they knew the payment will go right at 12:10 midnight. The person who approved it, he approved it at 11:50. Within that 20 minutes, the transaction, there was a change which was made in the account number and the name of the account holder. The transaction was made at 12:10. They realized it after 15 days. The payment has gone into a different transaction, and the person was smart enough to change it after the transaction was made as well. So you need to build that kind of a mechanism that whenever it happens, you should get alerted with that. And that can only happen once you utilize technologies which has an embedded AI and ML.
Yes.
Whenever there are changes happening, you should get to know about it. Second aspect is to look at it from the customer perspective, is doing a scoring analysis of a particular transaction or a particular business model. Then only you will realize that at what risk you are sitting at and what need to be mitigated or prioritized to be taken care of first, and then what can be looked at a later stage. Nothing can be ignored, that is by default, but what need to be prioritized is what need to be focused upon. Last thing which I want to talk about on this particular aspect is the proactive approach, because most of the business model which we are running today and the transactions which we are doing are more of reactive, not proactive. And by using these new technologies, it's high time to move into a proactive mode than a reactive mode.
Yeah. Wonderful. I think a lot of guidelines. So how many of you are happy with these guidelines? And one of those guidelines, how many are happy with the password? Anybody is happy with passwords? How many of you have more than one password? Almost all, right? And how many of you write them down on notepad? Or many of them. That's a human tendency, right? Nobody want to remember. And like in banks, there are rules, regulation. Every 30 days it has to be changed, right? On internet banking, every 90 days or 120 days. There are two types of passwords, so login as well as transaction password. Moreover, one OTP, right? So many frictions. And CISO will say this friction is required. Business guys will say my customer will go away if you bring on more friction. So I think it's a exercise, right? Balancing how customer experience and so on. So while we have a text passwords, now new methodology you said, right? So new methodologies are coming based upon risk score. adaptive authentication, give a second level challenge, could be SMS or voice, or could be invisible password. So I think tomorrow's word, like the way we see some of our partners in DSCA conference, passwordless, right? That's going to be the world. Maybe biometric passwords, behavioral passwords, and maybe I will decide on my own whether password is needed or not, right? I will say, I will keep limits of those transactions or limits of usage. Many more things are coming. You touched upon one important angle, the way we have created a lot of regulations or privacy norms. It's all because of we have designed that way. We have designed a client, one server, one mobile app and multiple hops. We have designed there has to be a screen where you will put a login, right, MPIN. We have designed in a such a way that it has to be on Android or iOS. Now, while we have these territorial things, we look at what more should be improved. And when we want to improve, we look at technology. Maybe it was a web technology, tomorrow is Web 3. People talk a lot about Web 3. And Web 3 is something like combination of AI. You touched upon AI, or you touched upon some of those other technologies which are coming, blockchains and so on. People say blockchain is the most safest technology as a concept. Maybe it could be vulnerable, right, while we design and so on. So I think Steve would like to seek your guidance. All these new age technologies are coming. I think some of you must have attended generative AI course also so far, right? Looking at the traction, the business model. Many banks have started enforcing how they can utilize ChatGPT kind of ecosystem as a POC pilot. So embedded finance is going to be very much, AI is going to be very much important part on both sides. AI will help to generate customers, acquire customers, as well as AI will be there to gauge whether it is a fraudulent customer, whether the transaction is good or bad, or whether this transaction can be utilized for another opportunity. So Steve, over to you.
Yeah, I think we already know that last 10 years we completely changed the way we're banking, right? Nobody goes to the bank any longer. I doubt we even go to the website now. Everything is on the handheld device. Everything is done via apps. Everything is done via maybe the AI models that the banks has already used, customer service also. So I think a lot of benefits that both AI and blockchain have brought, as well as there are certain risks. I think from a benefit perspective, I would say what could be the way forward, and what is already we are observing is the personalization of the services, right? The huge data, the data that the banks have been collecting via different sources, that can be easily analyzed to offer customized services, tailored solutions, and gives a more personalized, intuitive, way of customer experience to us, right? Today, as you're right, when we begin this session with, everybody gets at least one or two SMSs. I don't think it's still that, it's still customized to a certain extent, because this friction which still exists, there is a way to go. And I think AI and ML will definitely over a period of time change this, right? That's one. Second is the fraud detection mechanism.
Yes, correct.
Even today, if you see the RBI recent report, I believe in the first half of last financial year, 22-23, there were close to 5,000 frauds amounting to a whopping 20,000 crores, right? Which means these frauds are happening. And you need other technologies, you need AI, ML, you need blockchains to bring this down, right? Because with the data, there is this opportunity to analyze it on real time, detect those anomalies and action. You've seen, it's not that it's not being practiced today. Today, if you swipe your card or you do a transaction which is not, which is abnormal, you definitely will get that call from the bank and saying that, have you done this transaction? So it's there, but I think there's still way, given the sheer count of fraud that we are still seeing, I think there's a long way to go, and how AI can help improve this. Regulatory push. We spoke about the regulatory requirements. We spoke about privacy that's coming up. It's a complex requirement. Those are there. Reporting in 6 hours. Maintaining logs right up to the MAC ID, the IP address, all of that. That's not possible the way you do traditional way. You will have to have AI-enabled technology which will help you to churn all of this data, make meaningful sense of it, and help meet even your regulatory and compliance requirements. Automation. I think in general, we've been seeing today the bank onboarding journey, which used to take days and months. Today, we are looking at it in a few minutes, right? It's just about scanning, doing another online KYC and things like that. I think while this is the case for infrastructure which is banked, what about the unbanked environment? Today, while India is probably the most advanced digital economy, we still have a huge population of unbanked, population. What do you do about that? So you need something like blockchain, which can help identify those unbanked where people do not even have credit score. Bring in the technology to help identify and those kind of customers and extend your financial inclusion all the way to them, right? And probably the reputational part of it, the data breaches that we are talking about, how are you going to deal with that? If the huge chunk of data in terms of API, we are talking about an ecosystem where you're connected to a bank, you're connected to a retailer, you are connected to almost everyone. This data, how are you going to analyze it? The traditional SIM and SOAR models are not working anymore. So you need to bring in the AI models, bring in the blockchain models, which is going to improve your overall security posture as
I
well.
think wonderful. And another example I can give that there is a norm or a mandate for all banks and NBFCs. If a fraud happens in your organization, you have to report that to RBI. As far as the banking is concerned, you have to report by hook or crook within a tat. You have to report, right? And the process of reporting is a little bit manual, rather little bit huge manual. You have to create a file which is a XBRL format, which is approved by RBI, which is one of the well-known format in the worldwide. And even RBI got award also in that whole thing. Now, reporting that in a FMR window of RBI takes 1 or 2 days, right? Where there is a manual process. And after reporting, that data will be churned by RBI officials and they move that data to Central Fraud Registry, which is available after login by NBFC's banks to see whether customers are okay, not okay. And while onboarding any new customer, they have to refer that data and say if some customer is fraudulent, let's not onboard him. Now imagine the whole process of reporting one fraud against a fraudster and understanding that fraud data is available in CFR takes 30 to 45 days. And in between, this fraudster will be running around, will becoming Vijay Mallya or somebody else, right? That's a problem where blockchain kind of ecosystem can come and on the spot report a fraud which is available immediately, all the actors, banks on the chain. Like this is a one use case, could be many more other use cases, like onboarding a customer, onboard once in one bank, available to insurance company, wealth company immediately, where it takes 5,000 to 10,000 to onboard one customer. Forget about API banking, operational cost, core banking cost, people sitting in that whole process. On an average, that's the cost. Imagine that cost will be nullified for a next bank. So I think AI, blockchain will have their own journey, and good to see that at least AI is becoming normal technology. Everybody has understood it's a power of acquiring customer with AI, reducing operational efforts, and so on. You touched upon one important angle, right? How do we reach out to the mass customers, typically in farmers or villages or second tier 2, tier 3. So we'll seek guidance of Snehal coming from Mahindra Finance. So how do we, while we have this embedded finance SMS available immediately in my pocket, how do we reach out to that customer, those set of customers? Yeah.
Okay, so one key aspect here is education and awareness, because at times there is no awareness that such kind of facilities are available in the first place, right? So that is very key. In the unbanked population, there are certain things that we specifically do. So for example, customers who are rural or the urban poor, at times they do not have a credit score, and without a bureau score, the banking or financial entity cannot do a credit assessment for them. In such cases, there are some approaches, like if they do not have a credit score but they have a bank account, there are ways of getting that data through account aggregator. There is a Sahamati framework that Government of India has made available, which helps us get real-time access of the banking data and do a credit assessment basis that. One is that. Secondly, now if the customer doesn't even have a bank account, so how do I assess that customer? That is where your AI ML comes into picture. So I could just give a SDK in that person's phone, which is capable of reading their SMSs. Basis their SMSs, I can build some models which will be able to give me some credit to those customers. Now, when we do all of this, again, privacy is very important. So when all of this is done in embedded finance also, there is a very there is a focused approach on, ensuring that the data is, anonymized and it is not stored with a non-financial entity, and once the assessment is done, it is deleted. One is that. And second, consent. Consent is very important here because, and that is something that maybe the unbanked population on the rural side, they don't understand the importance of consent, or so, at times doing a fraud might not be that complicated. It could be only about triggering an OTP, calling the customer and asking for that OTP. This is where the education and awareness part of it comes, that you're not supposed to share the OTP. So there are these, these are the efforts that all, players in this area need to do to educate the customer, one, and then look at other ways of assessing these customers and making these services available. The third part which I want to touch upon is there are these fair practice guidelines which come from RBI, which tells us that you need to make your journeys and SMSs available in vernacular language also. That is again a very key thing, because at times customer is giving consent or agreeing to an agreement that the customer cannot even read. So these are some of the aspects which are very important, and we also follow them, and that can ensure that there is no misleading, and there is this complete trust when it comes to getting the rural or urban poor in the fold of embedded finance.
Enjoyed your answer around how do we really take care of. One of the example which I have seen, one of the startup, how they are working on is that there is a process or there is a mandate to all banks through governments to provide a Kisan credit loan, right? KCC and RBI Innovation Hub. You want to talk about that? Yeah.
Yeah. So, Kisan Credit Scheme, as you said, it is one of the mandate for all the banks that they have to make those schemes available. But this is where I was saying that, on the rural side, they might not be aware that such kind of schemes are available. There's one very interesting thing that Microsoft is doing with use of ChatGPT actually, where they are getting this bot made available in places where they do not have answers to such things, right? So they are creating this bot where they can ask a question in their vernacular language as to what government schemes are available to me, and the bot will read all the schemes and give those answers to them.
Yeah,
So
yeah.
these are some of the innovations that are happening. And so while as a mandate, many banks, NBFCs do provide these products, but for example, there are not many ATMs in rural areas because they are not profitable, right? So to avoid these things, there are compensating actions that are being taken, and hopefully that will help the unbanked population get into this.
Yeah, I think a lot of
ambit.
support from government also through a lot of schemes and mandate to banks is making it happen. One of the startup which I know, they are creating a farmer ID. Apart from Aadhaar ID, it is attached with the farmers' environmental factors. Where is farming? Where in Kerala? Okay, what's the tendency of rainfall? Various environmental things that gives a traction to the bank whether he is going to repay back the loan or embed. That's another example. That's the use of technology we have seen. Huge thing. I think when we talk about banks and embedded finance, it touch upon how to deal with the fintechs. And in RBI, the way they are guiding, rather creating a lot of guidelines. We have seen guideline of how to outsource the work to these fintechs or companies. There are other guideline which is the digital lending guideline, which has come up and disturbed a lot of market. Could be on a larger journey. It is a beneficial for finance of India, which will help better clarity to the end users, customers. Because today customers can get loan from XYZ, ABC, but they may not be right authorities because they don't have that credit license. We could have seen that at least 75% companies vanished after that guideline, which is a buy now, pay later and so on. So I think a lot of things are happening on a regulatory perspective. Immediate quick check, right? What guidelines or what things are coming from a regulator's perspective, Pawan? Yeah.
You already talked about the complexity which are there in multiple guidelines. One says that the reporting has to happen in 48 hours, and the other comes up with a guideline and say कि reporting has to happen in 6 hours. So company is confused what to do and how to comply with the guideline. So that simplification need to be brought into the system. But unfortunately, our market is not mature enough to do that. But that's something which need to come up, and slowly and gradually we see it is happening. Like I can talk about insurance, the regulator, the new guideline which has come up, they have tried to simplify it to a certain extent where they say that whatever is coming from the other guideline need to be complied. And certain things which were mentioned in the old guideline has been removed, so which simplifies that what is defined by for example, certain need to be followed rather than a separate guideline to be followed what they have defined earlier. Talking about the reporting aspect, if an incident happen, in how many hours need to be reported, and uh, the action need to be taken. So from the security or privacy perspective, if I look at it, all the guidelines, if you look at it, whether it is SEBI, RBI, IRDA, or even GDPR, if I talk about it, so all revolves around three components of a framework. So one size does not fit for all. So we all know that. So one framework or a standard, if you pick it up and try to deploy it within your organization, you may be able to achieve certain aspect, and in certain aspect you may fail. So you need to see that what best fit and then adopt it accordingly. But when it comes to security and privacy, I can talk about that there are three main components which are there, and along with that there are around 8 to 10 pillars, and I'll give you an example that what can be achieved using that. The three main components of the framework is, first is defining the cyber and data security resilience for the organization, because once you define that, then only you can build, use the components of the pillar to embed that into the system which best fits in an organization. Second, to put the security operations center in place. Now you call it as a cyber security operation, or you call it as a data security security operation. It's up to the organization with the definition, but this is a very important component because it gives you a visibility of what is going on within the organization when we talk about IT components and other aspects from the business side as well, because when you put it in DLP, it gives you that kind of a visibility as well. The third is how you respond to a particular incident. So cyber and data security incident response management is very important, need to be placed. And most importantly is within that framework, you need to identify people who are going to respond during a cyber incident and make them aware of that. In multiple scenarios, even in one of my previous organization, there was a challenge which I experienced. Even after giving multiple training and tabletop exercise, people used to come up and tell us that, okay, I was supposed to do that, I didn't knew that. Because they are not in the practice, because it doesn't happen every day. So a regular governance needs to be put in place where they know that what need to be done and how they need to act in case an incident happen, and what the way they need to respond. Now when I talk about let me go to the pillars now, the 8 and 10 pillars which I talked about. When I talk about cyber resilience, the first and the most important thing is to have a policy and procedure in place, because those are the pillar of your cybersecurity framework which you are going to implement in the organization. If those are drafted and particulated in the organization and you were able to make everyone understand that, half the battle is already won. Correct. So that's something which needs to be focused upon. Second is the IT architecture. So organizations running from 10-15 years may have legacy systems in place, and most of them are patched. So when I say patched is, there was a business requirement and something has been built, but it was never embedded together. One piece has been created standalone, the other is already running, the third may come up. You have to weave them together. If you're not able to do that, then you will have multiple holes and you will just do the patchwork. Band-aid lagate jao, aage badhte jao. That will be the approach which will happen. Third aspect is the building the security on the IT architecture. So the important aspect is to review what has been configured on those devices, and you have to regularly review that. If you don't review it, then you may realize that there are certain components which have come recently but not been, since you are not using it, those are the loopholes which are there which you need to plug in, and at times it may be too late to fix them. So a regular assessment needs to be done on that. Fifth component which I talk about is the customer information which are there in the system, but people are not aware of it, that how to use it and how to protect them. I talked about it in the earlier question which I answered, is make people aware that the data they are dealing with it, how important it is and how valuable is that data for the organization, and categorize them accordingly. So now most of the regulation which are coming up have given even the categorization of the data as well, how you need to classify the data and which data falls under which category. whether it is restricted, whether it is confidential, whether it is public, or it's just a data. It has been clearly called out in most of the regulation now, and going forward, you will see that it is getting simplified. So if I look at it, it's making our job easy, but it is making our job complex at the same time as well, because making people understand the importance of that data and that categorization plays a very important role. And that is where you need to identify a right technology with AI and ML, which will help you in auto-categorization that data for that particular user, and you just have to tell them that how to utilize that data. The fifth component is the building the cyber crisis management plan for the organization. Most of the people may not be aware of it because there are certain guidelines which are issued by the government itself, and they are extensive enough. And I'll call out some of them which are there in the National Cyber Crisis Management Plan, which is issued by the CERTIN, Cyber Security Assessment Framework, which is also of CERTIN, and there is some guideline which is issued by the NCIIPC, and those need to be, if you build your framework accordingly, then it makes sense. I mean, you will be able to achieve the cyber crisis scenario in case it happens. The seventh component I want to talk about is the cyber and data security preparedness indicators. With regular training, that can be achieved. So those have to be built in into the system. Last piece I want to talk about, and that is the most important piece, is the spreading awareness. Like I said, that it does not start from top to bottom. It is a bottom to top approach. So even your board members need to be aware of cybersecurity concerns, and they need to be taught through, or they should attend the cybersecurity training module which you have created. It has to be made mandatory. If you don't make it mandatory, then those are the who will be most vulnerable. Anyways, the whale attacks keep on happening, and they will be the most identifiable targets which will get fished first.
Yeah, I think wonderful. I think just to summarize, wonderful discussion. Board members are now mandated, right? At least in front of me, I have seen board members going to IDRBT and studying MDs, right? They are asking what to study, how to study on a ground level. I think every organization looks at how they are moving from one orbit to another orbit, typically banks, insurance companies. And this orbit could be measured by people in that organization, how they are skilled. This orbit will be measured by digital index or a digital transformation index of every process, maybe a operational process, manual process, or a digital first process. And this orbit can be measured furthermore, as Steve said or Snail said, how we are adapting new technologies, cloud or open banking or AI, blockchains. Furthermore, this orbit will be measured by what regulations we follow. We spoke about a lot of regulations, guidelines, which everybody should follow while getting into embedded finance. Then there are many standards also. Furthermore, orbit will be measured by what type of partners we have. Whether we have new age partners, like some of our partners are around there, and if you are not adopting these partners who are in this conference, I think you are missing out, right? There are some path-breaking partners who are talking about passwordless, who are talking about the new age SOC, like Prophase is there, or some more guys are there, and ultimately awareness, right? How your employees are aware of those incident management, how they are part of those cyber drills, how they are really taking care of a customer grievances with customer calls, how they are working around that. And last leg, how much your customer is happy, how many frauds you have and how many frauds you tackled, right? It's always great to hear about some company has penalized or some bank is penalized. But let's hear about because of whom, or because of which guideline, or because of which CISO, or because of which partner, or because of which technology we have really surfaced on so many things. So I think time is so beautiful here onwards while we talk about embedded finance, many more business models backed by open banking. Today we are in era of digital finance. So slowly we are entering in a intelligent finance where intelligently banks or will give those notifications with the help of AI or blockchains. And tomorrow's finances will be born by your devices. Your device will say, I want loan. Right? Likewise, you may anticipate, may not anticipate, go back in 95 and have you thought of ordering food on some dabba or device, which is happening. So down the line from 23 till next 15 years, your car or your devices, will have their financial need. The finance will embed into that many aspects. Insurance, right? Cyber insurance finance, or taking care of your house finance, right? So I think business models are going to change. It will be so fast, it will be so dynamic, but I think data privacy, security, today what we talk about will not be there tomorrow. I think technology will make it more seamless, more, maybe more of a, less of a interaction, more of a invisible interfaces will evolve. So thank you so much, Snehal, Steve, and Pawan for this discussion today. Must be very useful for our audiences. If there are any questions, we can take up, or we move on. Yeah. Thank you so much. Yeah.